Let's say you had $1 million borrowed at 14%, which is not crazy, right? We know that dealers out there have some of those type of loans, right?
Okay.
And let's say they had $1 million in their reinsurance company. Well, that $1 million at 14% is $140,000 in interest a year, and you could borrow it from your reinsurance company at about $50,000 in interest a year. So you're saving $90,000.
Yes, real money.
That's real money, and that's real money, and that's
not paper profit. That's real money. Yeah,
and it's cash flow, and you forget about that. That interest you're paying out every month is cash flow.
Hello and welcome to the Independent Dealer Podcast. Education by dealers for dealers, and Bret, the third, the third amigo, the third leg to our tripod.
Yeah, he's there. He's looking good. His internet sucks, but I guess in Ohio that's what happens.
It's cold. Everything gets slower when it gets cold.
Yeah, when it's tied to the Internate's Ohio State's schedule. So when they play bad, they slow everyone's bandwidth down as punishment.
That's funny.
That's all that NIL money.
Stealing our bandwidth right now. Yeah.
That's awesome. Bret, but thank you for joining us today, man. I want to go over, we are going to discuss reinsurance advanced reinsurance, the high level graduate class. Like, we're going to go and get our doctorate today in the industry of reinsurance, because everyone who listens to this podcast knows reinsurance. You guys, every single week, we pitch it as an ad. We pitch it in things. Every dealer says it's the best thing they've ever done, blah, 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 blah. Like, so if you're listening to this and you're going to continue to listen, you've already got your reinsurance company set up. You've called Buckeye. You're up and running 1 month, 3 months, 6 months, 6 years, 60 years, whatever it is. Okay, Brad, that's going to be the framework.
Yep.
So now let's discuss some optimizations. Like, Luke and I, we both had our reinsurance for a while. Luke's on his way out. I'm still riding it. And we got a lot of dealers that are probably growing. But what are you seeing? Like, give us, first off, some tips of how we're optimizing it. Let's talk about some of the features that we could do kind of along the way to like make a little more money and where we hit that balance. And then I want to talk about what do we do if we have reinsurance money, right? Because that's kind of the big... That's where I'm at. I'm stuck with that. I honestly don't know what to do with it. So
he's got so much money, he doesn't know what to do with
it. No, it's scary. I got it sitting there and I'm like, I don't know. If I move it out of there, do I get in trouble? What if I do it wrong? What if I forget about it? Like, I have no idea. So
just forget about it. I was got $1 million sitting there. I'm just going to forget about it.
So Bret, first off, man, what advice would you give for those longtime dealers that have been in it that maybe need to optimize the way they're handling their reinsurance company?
Yeah, good question. I've actually given this talk to a couple of small groups, 20 groups that have kind of asked the same thing. I've got, there's a couple of groups out there that have been together for a long time. And some of those guys are at that, I'm ready to get out, or, with what we've talked about a couple of times is, the Parkers, Stephanie and Don out in Tennessee actually sold their business and utilized the reinsurance company as a way to do that. And that's going really well. But the topic is kind of like, I've got a reinsurance company. Now what, right? Like, now what do I do with it?
Yeah.
And those are good questions. And there's a couple of different areas to do. Like, the first thing is, all right, I've got a reinsurance company and I'm trying to figure out product wise, am I doing what makes sense? Right? Because when you first start a company, you start in, if you're buy here, pay here, it's like, all right, I'm going to do CPI and a warranty. And then it kind of grows from there. Right. And if you're a retail dealer, it starts with just service contracts, and then the 90-day warranty gets added in later, and then other products get added in after that. And, something on the retail side that's been really popular lately is everybody adding all the ancillaries, tire and wheel, ding and dent, bundles, things like that, just more opportunities to make a little bit of profit. And so I think the first thing you should focus on if you have a reinsurance company is, just like with any business, don't go open a second location. Don't go look for any. Am I squeezing as much water out of the rock that I have before I do anything else? And that really comes down to what products are you using? Are there any ones that you're not using? And that's simple. But then this time of year, it's have you gotten with your provider to look at how they're performing? What are your loss ratios on each individual product, right? Do you have a product that's running too hot and maybe it's an opportunity to put more premium in because it's completely justifiable because you got a nice loss ratio? And also, the opposite is true is, do you have a limited warranty that, maybe we're reserving too much or we're not utilizing it enough or you're forgetting to file claims, so those are all really good things to start with. Is based on the current products that I have, am I getting the most benefit? Are they working the way that I thought they were going to work? Right. So,
yeah. Is that coming to y'all and y'all pulling the loss ratios? I mean, where should our loss ratios be? That would be a question that I would have for you, because I think my reinsurance is working properly, and
I don't know either.
I think my CPI loss ratio is below the 50%. But where should my warranty loss rate be? Where should my gap loss rate be? How do we know these things, Bret?
Yeah. And again, it comes down to specifics, right, of your dealership. So a 90-day limited warranty obviously doesn't have nearly as much risk as a 2-year one, right? So that the loss ratios are going to be what you would expect them to be is going to be different. And it's one of those things where it's like, hey, if I'm in that, 20 to 30% range, I feel pretty good, or even 40%, that all of my claims are being paid. I'm protecting my portfolio. Or if I'm on the retail side, right, I'm making good money. I'm generating revenue. But I'm also, my reinsurance company is profitable, right? And that's where we prefer to have our profit, in that, deferred, special company. If your loss ratio is 80, 90, or 100%, then am I not, realizing that I should be putting, more money in there? Or is that an opportunity to look at what the underlying cause of that might be, which is, okay, hey, I've got a 90-day warranty and man, my claims on that are really high. Okay, well, guess what? That means we have a reconditioning problem we need to look at. So how do we dig into that? And these are the types of things that I do a lot. Is, as you guys are aware, I'm doing everything I can to try and still act like a dealer and have my dealer hat on, and not just be a vendor and say, oh, you're sending me money and this is how much it's making. But like, what is the story telling us? So high loss ratios, absolutely an opportunity to figure out, why are they high? What's costing me money? Why are my claims so high? We track frequency and severity of claims and all of that. And when we're looking at all of our clients across the country, man, it doesn't matter if it's buy here, pay here, or retail. You'd be surprised how similar all of our businesses averages ours. So if you're an outlier, you stick right out, and if your loss ratios are too low or too high, rest assured, Jake or, the accounting team is gonna send us a message and let us know. And then that's kind of how we try to stay on top of that with our clients.
And so that makes sense when it comes to the warranty side. Like I can adjust my recon, or I can change the cars I'm buying, because I'm selling a bunch of BMWs and Mercedes and they're tearing up and it's costing my clients so much money. I can adjust those. When it comes to like CPI and adjusting claims ratio, is that the only way to fix that is to go up on get higher penetration, or go up on your CPI amount?
Yeah, I mean, it's both of those things, right? It's the most common mistakes with CPI, and everybody knows this, and I feel like everybody makes this mistake when they first get started, is it's not for everybody. It's just for the people who can't get insurance. And then we create that pool of risk initially of like the worst drivers on the planet who just hit everything.
Yeah. Tell me about it.
So, increasing the premium that you're going to charge, to be proportional to the value, your ACVs of the cars you're selling, obviously that makes sense. I would say the overwhelming majority of our clients have gone up. I mean, when I first started CPI back in the good old days, it was $76 a month. And now, the average is probably almost double that. But, what's the alternative, right? 350 to 500, 600 per month car payments.
Let me ask you, Bret, what are you seeing? Because I struggle with that right now. We've kind of plateaued at like a, 30%, maybe 25% penetration on my CPI. Give me some tips and maybe other dealers, any input there on how to get that participation rate up. Do you think is it a sales issue? Like my salesmen aren't selling it enough? Is it that I maybe priced too high? Like, what are you seeing the real issues that dealers typically have when they stall out or end at such a low penetration?
Yep. It's almost always a point of sale process.
Yep.
Where what they're doing is they're putting the insurance quote ahead of like the end of the transaction. And it becomes, hey, get your insurance quote. And if we're cheaper, we capture them. Or if it's really expensive, we capture them. And that's good. So what we've been doing and having a lot of success with is if your sales process, the traditional sales process was they come on the lot. Do you guys require insurance? Yes. We underwrite them. We want to give them the car. Congratulations, you're approved. Your payments, $225 every 2 weeks or whatever it is. And then, hey, and then, they agree to it. And then we go and get insurance.
Mm-hmm.
And then after that, we find out what our real down payment is. Because obviously the down payment for the car insurance almost always comes out of the down payment, for the vehicle. So if you switch that up a little bit, it becomes, hey, congratulations, you're approved. Sign here. Awesome. Hey, folks, how are you planning on doing your down payment today? Is that going to be cash or card? And then from that point, I'm immediately collecting the down payment, receipting it. That's the first opportunity to initiate the opportunity for auto pay. And then when I come back, the conversation now becomes, hey, folks, have you set aside any additional money for insurance? Or were you going to take advantage of our CPI program today? It goes through the roof.
How about, Bret, if you present the initial payment? So this is what we did for a long time. We're presenting the initial payment with everything already added in. And then we tell them what's in there. And of course we can back it out if we need to and back stuff out. I think a lot of people try to sell customers on the lowest monthly payment they possibly can. And they miss this advantage in there.
I think buy here, pay here, and or retail. That's a pretty common way to do things. Hey, congratulations, we got you approved. This is your payment, and it includes 2-year service contract gap, and then your CPI would be, an additional $48 every 2 weeks, should you choose that option. And again, you guys know as well as I do, we've talked about, selling products and back end products. As long as a dealer you're disclosing that they're optional and you're not making anything a condition of the sale. I think having a strong, aggressive sales process is the best way to not only protect your portfolio, but also to, generate profits. And that doesn't matter what kind of dealer we are.
And this is this is definitely not a buy here, pay here thing or a retail thing. If you go to a new car store, you're going to go in that box and they're going to wear you down, and you're going to have to tell them no 3 times to not buy that extended warranty on top of the warranty from the factory you already get it. And so we're being less aggressive than the new car store, and offering probably better coverage in a lot of instances than some of the new car stores are offering. So don't be afraid to present everything. You got to sell 100% of the product 100% of the time, and CPI is a product, and so you need to be selling it every time. Everyone, just a moment here to talk about BlitzPay. BlitzPay is my payment process provider, PPP, whatever it is. But they're wonderful. They get the money in the bank, and that's really what matters. And it's simple to use, Jeff. It's so simple, and it helps us with our collection process.
Yeah. You know what I've really liked, and I'm going to fine tune this even more, is their cash pay network, which is a crucial component because we do have a lot of customers that want to pay cash. But I don't want to take cash in the office. It's dangerous. It's scary. I got to make deposits. So we're pushing it more and more and more. And then there's always the few customers that don't quite understand technology and push back, but we're educating them more frequently. And it's really making my anxiety go down because I don't have large cash deposits at the end of a Friday.
Yeah, I'd hate for you to lose any more here.
Yeah, it's stressful. But the self-help options are really what makes the difference. You don't have to have customers calling you, hey, run this card. No, they can help themselves because the portal is so easy. It's mobile friendly. It's all right there on their little phone, which everyone has, and they can take care of their payments themselves. That's the most important part.
Yeah, everybody needs to call BlitzPay, get them to hook you up.
I feel like I should know this answer, but can I bonus my salesman for placing a CPI policy?
You really shouldn't,
Okay.
because it's a point of sale thing. And I've had people ask that, and do I know people who do it? Sure. Um, CPI makes the sales process so much easier, and you're typically paying
Yeah.
those guys really well anyways, and you're bonusing them for the sale. So you shouldn't really have much of a need. But also from a compliance standpoint, we're not selling insurance. We're offering them the opportunity to enroll in the program.
Yeah.
And so I think it's a key thing from a compliance standpoint. The smartest way to do it is to not bonus at to not bonus for point of sale placements for sure.
And there's so many salesmen that have been doing this long enough to know how many deals they have lost because of insurance. When you give them this tool and say, hey, this is a tool for you not to lose those sales, I promise you they're losing one or two a month a lot of times because of insurance. So this is just another tool in our tool belt that really, really can help out.
Yeah, and I mean every retail dealer, buy here, pay here dealer on the planet has been talking about what a difference it would make for those extra 3 to 5 cars that they could sell every month. And for the buy here, pay here dealer, CPI, from not losing a sale because of insurance, not repoing a customer because you have the ability to midterm place insurance, and then just the way that it protects the portfolio, it just makes a lot of sense. It really does. But that, again, that's the overarching thing here is if you've got a reinsurance company, you really need to make sure that your products, your processes, and everything are customized to your specific dealership, what you're trying to accomplish. I mean, that could be different. I mean, if you're a 20-year-old independent dealer who's got Capital One and Ally and every bank on the planet and credit unions, your ability to sell back end and your ability to price that back end is going to be completely different from a guy who's sub 5 years in the business and still he's in that subprime trap, right? Where he may be profitable, but none of the banks will take a chance on him. And one of the things that I think gives us that big advantage is being able to customize the product specifically for those two guys so that you can make it work for them, especially when it comes to what you're going to reserve, or on the service contract side, being able to customize what the costs are going to be, right? What's this 2-year service contract and this 3-year service contract going to cost me? Because, a buy here, pay here guy, or a relatively new retail guy runs a VIN and the cost on that car comes back at $1,800. How do you make that work? Right? It's just, there's no room to fit it in, or it doesn't make sense from an expense standpoint for a buy here, pay here dealer to shell out all that money and have no control. So that's one of the reasons why reinsurance is really good. And customizing that control, constantly reevaluating what you're charging yourself to make sure, again, what's this doing to my cash flow? What is this doing to my year end? Is my reinsurance company doing well? Do I have a creditor or lines of credit? Are they still happy with the profit that I'm showing? All of those things have to be considerations.
I've heard that before when a dealer is trying to re-up with a bank or something, the bank starts questioning their reinsurance cost.
Mm-hmm.
Is this something you hear? Because we're talking about now, bank lines getting harder and harder to nail down. Is this something dealers should be worried about, or what does that look like in today's?
I don't think they should be worried about it, but I think assuming that at the end of the year, it's all just going to work itself out. And, if your reinsurance, if you're making money and your reinsurance company or other things that you're doing is set up in a way where it's looking like you lost, $100,000 a year, it's going to be hard to go to anybody and get money. And, do we have people who have very aggressive reinsurance companies? Sure we do. Are they able to get bank lines of credit? Of course they are. The banks know what these are. They understand the process completely, but you still have to be smart about it. And again, that comes into, again, constant communication with whoever you're working with about your program. And at least once or twice a year, you should be taking a look at it to see how's it functioning, how much profit, is going into the reinsurance company. What is the cash flow at my main business doing? And then again, strategically, when it makes sense to accessing that money in the reinsurance company in the form of loans or lines of credit. One of the things you see a lot of people doing who don't have reinsurance is, you meet down with your CPA at the end of the year. He tells you what your liability is. And then what do they all do? They run out and buy a bunch of stuff.
Right? 179, 170.
Yeah, 179s, man. You're buying, you're getting a new truck. The wife's getting a G-Wagon. You go out and you buy a bunch of cars for the lot to prep up for tax time.
Multiple
awesome.
boats.
Yeah, multiple boats.
You never have too many boats.
Too many boats. You buy your boats, but then come January, February, and March, what happens to everybody? They're completely strapped.
You sell the boats.
You sell the boats, right? You never even made it till spring. So again, if you're working with your plan properly and you're well capitalized in your reinsurance company, then you should be using that, especially nowadays, to deleverage if you can. How many guys that we talk to that, I still owe $600,000 on my dealership. We'll meet somebody who's been doing reinsurance for a while, and maybe they didn't know that they could do these things, and they've got all this money in their account. It's not invested. It's not in a money market account. And they owe, $800,000 to people at 12%, and they got $3 million in their account just sitting there doing nothing.
Okay, Bret.
Let's go down that rabbit.
Yeah, let me slow you down on that real quick, because I know a guy who struggles with that situation right now. That let's just call him a friend, has some reinsurance money that he doesn't know what to do with. Right. Yeah. All of a sudden, he's tried not to look at his reinsurance account because A, his rep doesn't call him as often as he should. I just sent him an email, so we'll fix that problem. B, I kind of like the idea of it just being like a piggy bank. Like, hey, I don't want to look at it. I don't even want to think about it. Like, I want it to be forced savings and someday, whatever. So that some days come. What would you recommend to this friend to do with that reinsurance money if he has fairly, of course, first off, it's get out of high interest debt, right? Like, I think that's probably the number one recommendation you would give to any dealer, right? If you've got whatever hard money loan, you've got some sort of a bubble that's resetting, or you owe family members or investors some sort of money that's over 8%.
Yeah, a lot of those lines, especially now, if they borrowed that money in the last couple of years, the interest on it is high. So if you can pay that off with your own money and then pay yourself back money at a lower interest rate, that's day one. That's a no-brainer. If you've got a bunch of money in there that you don't need to run the business, and you're like, what's the first step? That would be the first place that I would look, because you just don't ever know when the next COVID-27 is going to happen, or, anything to your business, or interest rates are going to go way up. So
let's just talk about $1 million. Okay. Mm-hmm. Let's say you had $1 million borrowed at 14%, which is not crazy, right? Right. We know that people have, well, it does, but we know that dealers out there have some of those type of loans, right? Okay. And let's say they had $1 million in their reinsurance company. Well, that $1 million at 14% is $140,000 in interest a year. And you could borrow it from your reinsurance company at about $50,000 in interest a year. So you're saving $90,000.
Yeah, real money.
That's real money, and that's real money, and that's
not bigger profit. That's real money. Yeah,
and it's cash flow, and you forget about that. That interest you're paying out every month is cash flow.
I get that, and that seems like an obvious one. If you've got 14% money somewhere, like, get that reinsurance money over there and get that paid off, right?
That's right.
When does that start having a diminishing return? Like, because if I have some owed money that's like 6%, is that where you say, hey, and you said an interesting thing, Bret. If you don't need that money to operate your business, and that's the gray area and the uncertain area that I fall into, is I think, okay, I could pay off that 6% money. I could pay back, even my real estate loan that's at 5% and pay down my debt on my real estate. Or what I'm really worried about is I'm going to need that money if or when shit hits the fan, or if I see an opportunity to grow my buy here, pay here, and I want to double down because the economy's hit rock bottom and we're on our way out. So help me think through that. Like, do you have any advice for a dealer in that situation that's like, well, I don't need it right now in my business, and so I'm just going to sit on it like a little nest egg, but now I feel guilty that all I'm doing is just letting it sit there. It's not doing anything.
Yep. And I think that's the thing that makes this conversation the most complicated thing to talk about when we're like, okay, we're going to do this for the next 45 minutes, is every dealer situation is different. Somebody who's, like we talked about earlier, a 35-year-old guy who's looking to grow his business, he should absolutely utilize that business in a different way. A guy who's got money in there he doesn't necessarily need, it's like, okay, great. What are you doing with it? First and foremost, obviously, is make sure it's at least in a money market account earning you some interest at an absolute minimum, right? We set up pretty much everybody that way now. The second thing is, all right, I've got some surplus funds. Are we talking about opening up a brokerage account in the name of the reinsurance company and investing that money? And now we're not earning money market rates of maybe 4%, but we've got an opportunity to do 12, 15, 18%, depending on, how aggressive you want to be, with those funds. And that's all perfectly fine as long as we're not locking it up in like CDs or munis or bonds, and you're not dumping it all into Bitcoin. There are a lot of complaints.
Hold on. You can't, but you can do that. You can do that. If you do it properly and you have enough cushion, right, Bret?
Yeah, for sure. You got it. It's all about just communicating with your provider, making sure you're adequately reserved, but you should absolutely make the money work for you. We see a lot of real estate investments, flipping houses, rental properties, apartment buildings, again, personal uses, paying off home loans and paying yourself back. There are all types of things that you can do. But if you're not having those conversations, no matter what your situation is, you're definitely missing the opportunity.
So the most liquid options would be a money market account or a brokerage account, and you want to dump it in an index fund for 12, for in the meantime.
And you could do short-term CDs as well. Do you want to lock it up for a year or 2 years? Not if you need the money. Not if you don't have enough to not do that, right, Bret? You're talking about those money markets should be just funds that you need for your reinsurance to operate, correct?
Yeah, so it's like what we typically do, and my whole thing is whatever you're required to have as an adequate reserve, right? Whether it's 250 grand, $500,000, whatever, or maybe for you it's 75,000, right? You've got that 75 grand in your money market account. Anything in excess of that, if you're in that mindset, yes, let's put it to work, right? Let's use that money towards, paying things off or investing it or whatever makes sense. But, and again, everybody's program is going to be different, right? So if you're doing 20 cars a month, and you're a retail dealer versus, we have retail dealers doing 600 cars a month. And, we have guys whose, average expenses for their warranty programs is 20 grand a month and people who it's 150 grand a month. So as long as we're communicating and making sure that everything we're doing compliantly, then yes, there's a lot of opportunity to put that money to work for you, whether in your business, for yourself personally, or even in other business ventures that you may have.
Can your reinsurance company own property or things of that nature, or do you loan it to yourself and then you buy the properties and things like that?
Yeah, so if you've got like a land management company, then you would loan the money to Buckeye Bret Real Estate, and then they would do whatever, and then Buckeye Bret Real Estate would obviously make the payments back to the reinsurance.
You wouldn't want the reinsurance company wouldn't really be in the business of holding real estate. It would just be the lending. It would lend that money back to your LLC. Yeah. You operate it as a hard money loan or a lending institution.
Yeah.
Hey guys, interrupt the podcast. Make sure you know now is the time. Last chance, TaxMax. If you're not signed up with them, we're right in the middle of Q1. All the W-2 should be hitting the ground here. The very last ones, I think January 31st is the deadline, which reminds me, I got to get mine sent out. They're going to get their W-2s. They're going to file. It's not too late to get signed up with TaxMax and take advantage of some of this money.
Yeah, it's sales, it's collections, it's side notes, it's everything. People that have repoed, all these things that you can use this tax money for. You got to use it though. You can't just say, oh, you know what? We're signed up with TaxMax. Let's use it, y'all. Get everybody going. Make sure your salespeople are trained to do it, trained to ask for it. Make sure your collectors are trained to ask for it, because this tax money is fleeting, buddy. It goes away so quickly. You need to get it in your bank.
Yep. You don't want to regret not doing it again. You probably didn't do it last year. You didn't do it the year before. You've ignored us for many years. Get on it now. Make it happen. Larger down payments. You're going to collect more money up front. It just helps the customer get qualified faster. If you're retail, helps your buy here, pay here guys have less cash in deal. So call the guys and girls at TaxMax today. This is your last chance. Interesting. So it sounds like I need to have a conversation about, or my friend needs to have a conversation with someone there at Buckeye about how to get that money out and into even a money market or a short-term CD, or just dump it all into Bitcoin right now.
You can,
I mean, think about the differences in operation between any type of dealer who's operating on a line of credit and with a floor plan, somebody else's money, and somebody who's operating completely self-funded. Those are two completely different reinsurance setups.
Yeah,
so it's and that's the idea with it being as highly customizable as possible is what products, how do I want them to work? What do I want my reserves to be? Where do I want to show my profit? Yeah.
That whole deal for retail dealers and, not having to have a floor plan and amount of money that could save you. And you're paying yourself. I mean, that could be $1 million a year. So many great things to do to invest that money.
Yeah. I mean, we've had several retail dealers and buy here, pay here dealers who started this a while ago, put themselves in a position where they no longer needed their $2 million line, their $3 million line, their $4 million line, and they were able to, get off of it and pay themselves interest. And then, we talked a little bit earlier about, we worked with our first buy sell with a dealer in Tennessee where one of our clients sold the dealership to another client, and the reinsurance company funds and setting up multiple programs was an intricate part of being able to make that work for both of them. And again, it's just a conversation. One of the things I always tell everybody is you're never going to ask us for permission on how to use your money or how to access it, but you should always ask for guidance. And that has to happen at least once a year with where are you at? What's going on? Are you performing? Are you getting ready to sell? Are you not? Do you want to grow? Are you going into sunset? Are you getting ready to start selling notes? Because you don't want to collect anymore. Awesome. Then we should adjust the way that your current products are, because if we're selling them, then, maybe we don't want as much coverage or things like that. So it really just comes down to what are your individual efforts? What are you trying to accomplish? And then setting up the reinsurance company to facilitate that as best as it can.
Bret, if I were about to close my dealership and I had this reinsurance money sitting over there, tomorrow I close my business, and what happens to my reinsurance company?
Yeah, so good question. That's actually come up quite a bit lately as well. So the first thing that would happen is obviously it goes into what's called runoff, meaning I'm no longer accepting any new risk, but you still have risk out there, right? So CPI after 30 days, obviously that goes away. All that money's earned out. Nothing to worry about there. But if you've got 12-month or 24-month warranties, or if you're a retail dealer and you're out there selling 2, 3, and 4-year service contracts, you still have a significant amount of risk. So that is kind of a headache, but at the same time can also be a really good thing. Mainly because what it means is if I've got 2 years of coverage for essentially just the cost of managing the reinsurance company, we've got 2 years to figure out what we're going to do with that money. What are we going to invest it in? What are we doing? You're still getting the benefit of that tax deferral. What happens in most cases, and I'm actually working with someone right now who sold their business and then within 12 months ended up buying another business that also has the ability to reinsure. So even though it's a different business, that company is going to start ceding risk again, which means it gets the benefit to stay open. So there's all types of opportunities for how you can continue to appreciate the benefit of the tax deferral. But worst case scenario or best case scenario is 2 years from now, you've accepted no new risk, but all of your other risk is gone. And you've got, $1.5 million or X dollars, sitting in the reinsurance company. We would file the last tax return, basically shutting that company down. And then that money becomes taxable at long-term capital gains rates.
And then I can take it.
Plan for that ahead. Yeah. And then it just goes away.
And buy multiple boats, helicopters, planes, whatever.
Whatever you want.
The remote control version.
Take some of your closest friends on vacation, whatever.
Buckeye Bret wants a vacation. He likes Italy.
I'll take one. I could use it.
Yeah. Luke bought me dinner the other day when he was out here with his reinsurance money.
There you go.
Well, I was consulting out there, Jeff. Come on.
Best spend he's ever done. Brett, so dealers that want to have more of these conversations, learn more, talk to you. Now, we've got some conventions coming up in 2026. Most importantly is the Buy Here, Pay Here United convention. I'm on the dealer advisory board, so the education is going to be top notch. I guarantee that this year.
No pressure.
Brett, what else do we have coming up, and maybe speak more about what we're going to expect there?
Yeah, so we got quite a few big things happening this year in 26. But Buy Here, Pay Here United this year, and obviously as we announced, merging with LHPH this year at Capital this year. They've done a show every year, which I've gone to. It's a great show, but bringing these two industries together, I'm pretty excited about that. We're working.
Wait a minute, hold on. They merged the Buy Here, Pay Here United and the Lease Here, Pay Here Summit into one show.
We don't get to go to San Diego, and
Oh man,
Or San Diego. I'm sure we could find another reason to go and talk about something.
yeah, well, I talked to Tim. We'll figure it out.
that's all right. One less weekend away.
That should be a good show. We've actually seen a lot. Our Lease Here, Pay Here business has increased pretty dramatically. I would say over the last 6 months. We see a lot of large retail dealers, independents, and also new car franchises really taking advantage of that Lease Here, Pay Here as an option with that kind of more expensive, but not necessarily certified pre-owned vehicle, and trying to attract a different customer. So that's been really good. And then again, just continuing to make some changes to our product. One of the things that we are offering too is we're really expanding on like our walkaway service contract options. You'd be surprised, or maybe you're not, is we have a lot of clients who they have reinsurance company, they've had them for years. They're customizing their deductibles and they're customizing their costs for their service contracts and all of those things, but they still don't reinsure everything. So having all of the different options and trying to be a one-stop shop is something that we've really focused on in 25, and we're going to be rolling out some things in 26, which should give everybody all the options that they need under one roof. So we're pretty excited about that.
Interesting. Yeah, I think there's a lot of stuff we don't even think about. As again, you talk about depending on your phase of where you're at in your dealership and how much money you can put into that reinsurance company. As you optimize one, like you said, you squeeze everything out of that one product, then you add another product, and you're like, oh, I never knew I couldn't reinsure for that. I know I didn't add VSI until like 2 years ago, right? I didn't even dawn on me. Wasn't on the radar. But as tax burden became larger and larger, you guys said, hey, do a vehicle single interest insurance policy on all your Buy Here, Pay Here's for the year. Huge savings for me. So
yeah, I mean, and at its core, reinsurance is two things. One, it's identifying the risk you already have and the checks you're already writing and saying, hey, is this one we could write to ourselves? Is this something I'd prefer to have more control over? CPI, way better to deal with CPI than car insurance, service contracts. And VSI is one of those, right? Like everybody has impound fees and total losses and skips and things like that. And so it's an expense that you have every day. And nowadays, more than ever, especially if you're out there with a line of credit or something, portfolio performance, delinquency, and charge off really, really matter. And it could be the difference between a couple of points in interest, no matter who you're loaning money from. So anything you can do to make that portfolio look better is really important. And, this is a hard lesson for a lot of the smaller homegrown guys where, they've got up to 200 or 300 accounts and they're starting to make some real money and they're completely self-funded. And then they want to go to the bank to get a line of credit. But for the last 5 years, all they've been doing is just charging everything off. And then their portfolio, you're making money, but you can't prove it.
Yeah.
Portfolio terrible. It looks like you're, just charging everything off. And so accounting for the transactions in a way that makes sense is super valuable. And it's becoming more and more important as the ability to lend money and need money to grow is getting harder and harder.
Yeah. So can Luke reinsure the liability for a sexual harassment lawsuit?
Oh, I don't know. I'm not sure that's risk that certain people would want to take.
What?
Well, that being big, no, I don't have that problem.
Can I reinsure for my broken window policy on my golf game? Because I feel like I'm paying for a lot of windows lately.
That's funny. That's funny.
Bret,
man,
hey.
if we could do that, Jason would be using it as an excuse to go to every golf court in the country and pitch. I guarantee you that.
Actually, I bet there's something there. Okay,
We've
Bret,
spent a lot of 18s.
I really appreciate your time, Brad. This has been fun, super informative for my friend. I'm going to make sure they know. We look forward to seeing you Buy Here, Pay Here Summit, Lease Here, Pay Here. You guys going to hybrid the name? Do I got to hyphenate it? Like you're some sort of
Buy Here, Pay Here, United Summit. Buy Here, Pay Here, Lease Here, Pay Here, United.
I don't know. That's a Sean question. You know, they don't involve me in those things. They just stick me on a plane and
Yeah, you don't know anything about branding.
nothing. Yeah. Why would you ask me? I have no idea.
Who asked Brett?
Yeah, because he would name it Buckeye Bret United.
You know what? That sounds pretty good. I like where your head's at. But then we got
Summit
the shirts
Buckeye.
colored. Yeah, can't be purple no more.
All right, guys. Hey, good times, Brett. We'll see you there.
See you guys later. Have a good one.